a lot of what's happened so far, especially from a property perspective, is there hasn't been much support for the landlord. So obviously the banks have their recourse with the covenants and the covenant testing, whether there's any breaches. The tenants at the moment have been given a right of stay and are communicating with the landlords about whether they can pay, can't pay, but they're protected from, in the harshest term, being kicked out. But the landlord in the middle is sometimes seen as the fat cat who's milking everything. But actually, there's got to be a bit more of an understanding, I think, as a whole, that the landlord is also facing pressure, because if they don't have the income, most landlords are borrowing, and therefore they need to service the debt. And so therefore there's going to be a lot of pressure on the landlords through to the end of this year. They're facing a lot of pressure in terms of people trying to renegotiate leases, etc. And I think that there just needs to be a tolerance to the landlord as well, to help them through this period.
Yeah, I back that massively, because we've done a lot of buy-to-let research recently, just because we know that it goes without saying the current pandemic's hit the direct borrower hard. But if you're looking at the third wheel there, which is the tenant paying back that essentially that mortgage in some way or other, these are the ones where we've had to do some real research on, proactively for us, to get a gauge of what the landlord market is like at the minute and what the feeling is there from a confidence point of view. But actually, it's probably going to change how buy-to-let lenders may operate moving forward as well, because it goes without saying there's also been a staggering amount of landlords that have unfortunately been hit hard and had to take payment holidays on their mortgages right across various different areas of the country. But stepping back a little bit, that's one of the fundamentals of a buy-to-let case, that lenders ask how people would deal with voids, and people have documented how they deal with them but still haven't dealt with them. So that's a real big thing to think about moving forward. And it's probably a little bit that exposes the landlord market a little bit. But again, it's a real proactive area for landlords to help and try and drive that to a positive place.
But I think what you'll find as well, Matt, is that from a tax perspective, there's the further tranche of interest relief restriction for the buy-to-let landlord. So if you have a certain loan to value threshold here, a lot of people are actually going to find themselves in a further position of negative cash because of the interest relief restrictions on their buy-to-let portfolio. And that's why it's absolutely critical for people not to wait for the January to prepare their tax return. They need to be doing it now to actually understand what their cash impact is, because a lot of people are going to be deferring their VAT, deferring their self-assessment tax, time to pay on their corporation tax. This is all going to come to bite. And if that's accentuated by an increase in tax next January because of the interest relief restrictions, next year is going to be problematic. So people have got a responsibility to themselves not to bury their head in the sand, but actually to forward look here. And that, because we're slightly moving away from the lending here onto business in itself and managing a person's own affairs, but that is critical knowledge for the lender as well. What does your buy-to-let portfolio look like? What is your future tax prediction? Are you in negative cash going forwards? What are you going to do to cover that? And these are the type of understandings that the accountant, the broker, and ultimately the lender need to understand as well.
Yeah, very much so. That's a really good point. Both around the voids and the future proofing of the various tax payments. If you look at how portfolio landlords are meant to be underwritten, they're meant to be underwritten very closely, and you fill out a whole load of forms. You fill out cash flow, you fill out a very detailed buy-to-let portfolio. You look at the business plan, and one of the questions asked is, how do you manage voids? And some lenders do that really well and are really go into a lot of depth around that, and they really do challenge clients. Say, well, look, really, you told me this. Can we see proof of it? You haven't got proof of it. Is that going to work? But other lenders, it's tick box. So we've got these forms on file, so we know we've asked these questions. We've got a generic response back in. That's fine. But yeah, you're right. If people are asking for payment holidays, well, you shouldn't have to, because your business plan, which we've got here on file from the application from last year, stated X. Why are you not doing X? Because X actually didn't really exist. because it was just put down because it's something which seems to be suitable at the time. So I do wonder if maybe more buy-to-lets for non-portfolio clients will also, you start to be asking questions that portfolio clients are asked, and actually not just ticked off, really looked at and got into. And Stephen's point earlier that where Market Hire will work well is that if it's something's complex, they speak to the client directly. How many lenders have a capacity to do that? And if they don't now, maybe they have to start to invest to allow them to do that. Because if you are asking a client directly about a proposed plan, you're going to get an answer as opposed to one sentence on a form. And again, it might be that the answer you ask a series of questions and you get a response back that wasn't articulated, but actually the client's got a plan, they just haven't really told you properly. Whereas on a phone call or a Zoom call, they can explain that to you, and suddenly it becomes more likely. I think it's just another shift that what we're doing now is going to take longer in the future. And in the same way Jonathan's alluding to, let's look at your tax now. It's the same thing as let's start looking at your mortgage now for a refinance in 6 months' time, because it could take 5 months to do this. Let's not. You're already in a bad situation. Let's not leave you on SVR and standard variable rate for another 2 months. Let's make sure that everything is in place, and if that includes making sure you've got funds to pay the tax that you weren't expected because of the mortgage interest tax relief scheme or anything else that's waiting, any other deferred things, let's get that now. And if actually you shouldn't be borrowing, you shouldn't be buying any property because actually you got that tax bill, let's find it out in the next 2 weeks. Let's not find it out upon exchange, because that's not a good position for anyone to be in.
That's been great. It's been really useful. Is there anything, I've gone through all the questions that I wanted to ask today. Is there anything else which anyone was really keen on explaining for brokers, especially before we end the discussion?
I think a couple of things for me, really. I think one of the things that we're going to see a lot of, right, is people inevitably now need to understand the greater detail of a self-employed borrower. It's no longer going to be about 2 years tax calcs and SA 302s to base your lending. It's going to be about your industry, the risks, what contingencies have you got in place, and what mitigants have you got to put forward to a lender that are going to support that, really. But actually, it's out of all of this, scarily enough, we might even see an increase in self-employed people. And I say that because, if you look at the risk out there to employed staff at the moment, there's actually, unfortunately, a lot of areas, it's just as risky taking an employed job now than it is going self-employed from a longevity point of view, unfortunately. Some people are being forced down a self-employed route. A very close example is my wife's a teacher, and she resigned from a current role to take up a new role at a new school. That new school is not open, therefore she's not currently working, and she's not quite sure if she's going to do a job. But she's also thinking about becoming a self-employed home tutor, which is a great market for a teacher that's currently out of work. So these are the things that we might start to see, and therefore it opens the landscape for more proactive self-employment, but also is a massive opportunity for intermediaries to get close to that self-employed market and sector even more.
I think my leaving message is let's be positive here. Let's as best we can embrace the situation that we're in. We're all in it together. There's no one that's immune from the effects of this. Let's just work together, and hopefully there's certain things that we can have put in place during this period that will really help the relationship between the client, the accountant, the broker, the lender, and that there's actually things that we can all do to help each other to help that business thrive and prosper into the new norm. Let's not see this as a negative. Let's work through it in as positive a way as possible, and as together as possible.